May 2021, the portfolio generated $63 in passive income. And if we compare that to May of 2020, right here, the portfolio generated $7. So from $7 in just a space of 1 year, we're going from $7 in income to $63 in the same time period. So if we look at April, we're looking at $26 in income for April. And if we compare that to April last year, it was $8. So the income section of the portfolio is doing quite nice and is going up as expected. So I'm excited about that. So as you guys can see right here, in the past 3 months, we've generated about $110 in this portfolio. Hello everyone, my name is Kaseem. Welcome to this week's dividend and growth investing portfolio update. I hope your portfolio is doing well. I hope you are doing well and you're having a blast into the second quarter of 2021. So in today's video, we are going to walk through the portfolio. We're going to look at the earnings. We are going to dive into some inflation topics. We're going to do a lot in today's video, so stay tuned. First thing first, as always, I always like to do this in every video. Go through this section of the portfolio with you. Just go through it from the current day all the way to the all-time here, so you can see how the portfolio has been performing ever since the past 3 months and the past year, because that's what this section captures. So if we click on day 1 here, on Friday we were down on the portfolio about $81, and the portfolio generated $2 for the day. Now last week has been quite bloody in the markets, but the portfolio did pretty well in recovering, so I'm quite happy with that. So if we look at 1 week, for the week we're up 3%. We're up 3% from the previous week, and we generated about almost $8 here. Okay, in just 1 week. In just 1 week, right here, we generated like $8, which is quite nice. Very nice. So for the month, we are down when it comes to the gains, but we generated about almost $30 in the portfolio, and the past 3 months the portfolio is up $1,500 and it generated $110 in the past 3 months. $110 pure passive income that's I did not have to do anything to earn. All I just do is invest in a bunch of different companies that I believe in their product. I use their product. I believe in what they do, and I just keep on investing in their company. Okay, so and in return you get paid basically every 3 months. Some of them pay every month. Some pay every 2 months. Some of them pay every 6 months, and some pay once a year. But cumulatively, I get paid pretty much on a regular basis every day, and that gets deposited in this cash balance here, and I use that money to reinvest back into the portfolio. Pretty much that's what I do on a regular basis. So as you guys can see right here, in the past 3 months we've generated about $110 in this portfolio. This is nice. Like I said in the previous videos, this is quite nice because $110 can definitely go a long way, in building up this portfolio and getting to that $1 million challenge, getting to that $1 million on this portfolio. Because all I do on this channel, all the things that I do on the channel is to get income to be able to feed this portfolio, get it up to my goal of $1 million, and then have the portfolio just feed itself, and the cycle just continues and continues over time, to the point whereby this portfolio will be generating income that I can basically be living on, and I don't have to worry about money pretty much for the rest of my life. So secondly, what I want to jump into, I want to share this section here with you guys, the ARK Invest section, because the ARK Invest funds, they've seen a lot of outflows in so far this year to date. Let me show you guys. They've seen about 20, the stock has gone down about 27%. Now, if you're an investor and you're watching this video and you have ARK Invest like I do, in my portfolio here, I have about $3,000 in ARK Invest in my portfolio here, and it's been down 27% this year. But I would urge you guys to zoom out, okay? Zoom out and look at the funds over a year. Look at the performance year to date over a year. It's still up 70% over the year. 70% ARK Invest is up 70% over the year. If you look at 5 years, take a look at 5 years, okay? The fund is still up. Let's see. It's up 472%, almost 500% in just 5 years, okay? And if you look at max time period here, it's up 450%. So if you go on year to date and you see this tiny little 27% drop here, this is basically nothing, okay? The market has basically rewarded ARK Invest with almost a 50% in just 5 years, almost a 50% return for ARK Invest. So, and a lot of people in the finance community, they always go on about ARK Invest and all these things. The market has obviously rewarded them quite nicely in the past 5 years. Okay, if you look at the max year period, the market has rewarded them quite nicely. So I wouldn't just say, oh, because this year the fund hasn't done well in just a year, I would ignore how much of a great investment, great fund this is. Who knows where the fund will go in the next 10 years? But I believe in what they're doing. Innovation, investing in innovation has never done anybody wrong. Can you imagine if you invested $20 and invested like $10,000 in 2017? You would have had 500% gains in 2017, beating the S&P 500. Like, not even. Let's see the past 5 years on the S&P 500. This is 84% gain in just the S&P 500 as compared to ARK Invest. Okay, ARK Invest is giving you roughly 500% gains. It crushed the S&P 500 in 5 years. So this is a tiny little bleep. This 30% drop is a tiny little bleep. Matter of fact, I would probably be loading up on ARK Invest and be buying it at for cheap right here, because the market has clearly rewarded them over a long period of time. So what I would do is I would urge every single investor out there, if you're investing in the markets, you should always look back at the big picture, in terms of the company that you're investing in, the ETF that you're investing in. Look back at the bigger picture, look at their performance, and also just look at the stuff that you're actually investing in. Like the theme that you're investing in. Is the theme a good theme? Are you able to make money on the team? And also give yourself a little bit of time to build into the theme that you're investing in. In the past 3 months, or the past quarter, in the past 3 months, the fund is down for me like 8%, but I'm not going to stress over 8%, first of all. And this gave me a chance for me to buy into the fund at a cheaper price. It's down 8%. I'm able to jump in. I'm buying at 8%. And plus, like, this is part of ARK Invest. ARK Invest is part of my growth investing fund. Okay, it's part of the growth section of the portfolio because they specifically invest in growth companies. The other thing that I also want to share with you guys is the cryptocurrency section. Now, we know because of Elon Musk and a bunch of things that have been going on, crypto has been decimated lately. But again, I will urge you guys to look at the big picture. Coinbase is a great company to invest in because they have a lot of money. They're holding on to a lot of money when it comes to cryptocurrencies. They are holding on to a ton of money, and they one of the big three gatekeepers of cryptocurrency. The people that are in charge of how you get into crypto and how you get out of crypto. What do I mean by that? How you get in based on when you're bringing your dollars into crypto or whichever currency into crypto, and then exiting from crypto into that currency. They're the gatekeeper, and in between that, they're going to collect fees. Okay, that's just the brokerage section of what they do. That's the brokerage section. At the same time, they also have a section where they are an exchange. They're like the New York Stock Exchange of crypto. They're like the London Stock Exchange of crypto. And this company just went public. Like, they just went public not too long ago. So a little 25%, it been down 25%. Don't really faze me much at all. It don't really faze me much at all. I just wanted to point that out because people have been talking and just been getting scared and basically selling out of growth in general, which, to be honest, I think it's a bad idea. It makes sense to just still stick with growth and invest. If the companies that you're investing in, they go down significantly, it makes sense to still stick with them and just keep on investing and dollar cost averaging into your companies. So let's take a look at this really quickly. In the past 3 months here, I showed this earlier. In the past 3 months, we generated $110. But I want to show you guys how this money comes in. It comes in very slowly, little by little. SPHD here paid me 41 cents. Starbucks paid me 25 cents. And I'm happy to receive all this little money from all the different companies, because I know over time my goal is to build the amount of money that I own of all these companies, and the interest, the dividend that I receive will also go up over time. So this is pretty much how the money comes into the portfolio. You see, Apple paid me $2.90 there, almost $3. American Express, they pay me dear. All these companies that we all use their stuff. This is what I do. This is how I make money in this portfolio. And obviously, not just only by dividend, it also goes up by market gains as well. So with that out of the way, the next thing I also want to talk about is the monthly income that the portfolio is generating, and I want to compare the past 2 months to last year's 2 months, or the past 3 months or so, 4 months. So no, I don't want to do January. Let's do the past 2 months. So in May 2021, the portfolio generated $63 in passive income. And if we compare that to May of 2020, right here, the portfolio generated $7. So from $7 in just a space of 1 year, we're going from $7 in income to $63 in the same time period. So if you look at April, we're looking at $26 in income for April, and if you compare that to April last year, it was $8. So the income section of the portfolio is doing quite nice and is going up as expected. So I'm excited about that. So if you take the same information and look at the monthly income in comparison to the annual income, you can see that we had a little drop here, but I believe over time this will grow steadily and surpass all these previous months as well. So looking forward to that. So the other things that I also want to point out to you guys is the inflation numbers. Okay, the market has been going down recently just because the Fed reported a higher than usual inflation numbers. So the market is scared that inflation is going to go out of hand, and we're going to be seeing a 12% inflation in the United States, which is crazy. It's really, really high. But I also want to urge investors out there to keep a calm mind when it comes to the inflation numbers. If you guys look at what has happened in the past 15 months or 18 months or so, you can see that basically we had like a black swan event whereby we had this illness 19. It just showed out of nowhere, threw everything out of whack. Factories had to close down, a bunch of things had to close down, and then the government had to come in with stimulus to keep people afloat. So there's a lot of money in the economy right now, and there's a lot of money chasing fewer goods. So with the law of supply and demand, when a lot of people are chasing fewer goods, most likely the prices are going to go up temporarily until supply chain catch up to demand, and then price will kind of normalize. I want to show you guys this chart right here. Let's take a look at the past 2 years of inflation. Right, in January 2019 we had 1.6. You can see the data right here. We pretty much stayed below 2% in 2019, and 2020 we saw in January 2020 we saw 2.5%, and then we pretty much stayed down during the illness 19 period, and then inflation started going back to that 2% range right now. I believe this 4.2% that we're seeing right now, it's probably just a black. I would say that within the next 2 years or so, or like 18 months, inflation should slowly creep back to about 2%, where the Fed wanted, just because supply chains needs to get back on track. Housing prices has gone up, lumber prices have gone up, so many things have gone up just because there's a lot of money out there chasing fewer goods. So once supply chain catch up, I believe prices will come down to the normal level, and we should be seeing a 2% inflation rate again. So I don't think that the markets should be worried about inflation, because the Fed told us we are going to be just fine, that this is just temporary. Most likely when supply chain catch up, inflation will go back to normal, which I completely agree with the Fed on that with. So that's pretty much it for today. I appreciate you for watching. If you have any question, comment down below. I'll be happy to get back to you. And if you like this content, consider subscribing to the channel. At the same time, give this video a thumbs up. Love you all. Have a good day. Bye.